Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday the 13th. That's Friday, September the 13th, right? The year 2019. Let's talk trading weekly wrap up. I know, the first 2 weeks of this trading month, you all have used perfect money and risk management on each and every trade, and those trades that you lost, you didn't lose more than you were willing to lose, right? Now, I do want you to remember these videos are for educational purposes only, and your results may differ from mine. And that to remind you that Forex trading is very risky. So, if you're seeking financial advice, it's best to seek it from an accredited financial professional rather than some Yahoo on YouTube. Okay. Because when they lose your money, you know it was lost by a professional. So, now that that's out of the way, if for those of you who are just tuning in at the end of the week, all the weekly gaps have filled. So if you missed those opportunities, that was on you. And this week we've been talking about range. And you can see here on this weekly chart of the dollar yen, we had a nice range. In fact, it's about 149 pips. That's pretty much above the average range. As you can see here, that's a nice long. And we've got 3 green weekly candles in a row. Price broke out of the previous week's high, 88 pips. So any of you fortunate enough or wise enough, or if you just said, what the heck, and you took this trade here at that breakout, and you're just riding it till right now, you're up 88 pips. And if you could have pulled 100. Maybe you said, okay, if I make 100 pips, I'm out. You would have cashed in. And if you look at the yearly chart, you see we pulled off that yearly low here. 365 pips. We're only 154 away from that from the yearly open. And we've been talking about range. You can see the kind of range. Now price is ranging. Now, one of the things about range, if you remember the frequency distribution charts, most of the time, the dollar yen, the range is below average. And if you think about it, it makes sense because they say what? In the market, it's about 70% the market's ranging, and about 30% of the time it's quote unquote trending. And you know how much I hate that word. But I almost like to think of it kind of like quantum states. You see here, price was ranging here, and then all of a sudden it moved to a different quantum level, then here, then it moved to a different one, then here, then it moved back to this state here, then here in this level, and then it moved down to a different quantum state, and here it's moving back into this quantum state. But that's just the way I like to think of it, only because I studied that stuff in school. But we don't have to really worry about quantums. We can look at something really simple. Here's the first day of the month, trading day of the month. Here's the first trading day of the week. What happened? Price moved out of this range. And then we have another range for this week, and price moved out of that range. So we'll have another range for next week and so on. But if you think about it, you take the first day of the month, right here, that's the range. Now, price, the monthly range is going to be bigger than the first day of the month trading range, usually, because maybe the first day of the month could have a really huge range, and the month then just stays within that range. I think that might have happened back in January, actually, because we had that really crazy spiky day, the first day of the year. but that's an anomaly. Point being is that price has to range away from the monthly open to get the monthly range, and it has to range away from the weekly open, and it has to range away from the daily open. That's why the buy zone works. And if you notice, we actually got above a couple of these opening days here. We're stalling right here, but it's real close. And as far as the day ranges, you can see we're actually above 4 of the low opening day ranges: August, June, and July, and of course September. Inside bar, once again, you just have a bar that's an inside bar where it has a lower high than the previous bar and a higher low than the previous bar. We call that an inside bar. And then price usually ranges outside of the inside bar. So anybody taking that inside bar break back on what? Friday, Thursday, Wednesday, Tuesday, Monday, could be up 105 pips if you wrote it out. So that's why we like to look at inside bars. Speaking of range, 1, 2, 3, 4, 5, 6, 7 pairs over 100. Put the dollar yen clocking in at 35 pips. It's pretty pathetic in a way, but it did move a lot this week. And you can see here it broke out of the previous day's high, and that was good for about 7 to 8 pips there. No, yeah, it was about good for 7 to 8 pips right here. The difference between today's high and the previous high. And looking at the highest open, lowest opens, you can see here the monthly H1 highest open was put in, price fell down, put in a daily lowest open, and you see you had a few opportunities to jump back in. Oh, if you're wondering why I don't have the pips away indication here, it's because these, it was just getting a little long and I didn't want to, and so that's the reason why. Pivot point trading. Here's the open, there's the pivot. So we would have ignored any long triggers until we filled that pivot right here. And you see price did hit the pivot. And once again, explaining the range from open to the high to the low. That's the range from high to low. And price ranges off of the daily high and off of the daily low. It comes back. You can see we're 11 pips now off the high and 24 pips off the low. That's just how it works every day. And once again, only 35 pip range. So rat zones are overlapping. Not really a rat zone kind of day. But then again, you can trade the rat zone off the weekly and off the monthly using the same 20 pips. And the reason why you use the same 20 pips, because if it's making a monthly high, it's also making a daily high. If it's making a monthly low, it's also making a monthly low. Ditto for weekly. That's why the rat zone distance does not change. And here you can see we took out that pivot. We already took out the monthly pivot back here. And you can see so far we've got 3 missed pivots. This price is just moving away. So these pivots might get filled, or maybe it might try and fill this pivot from let's see, 75 days ago, 109.66, so that's back in May. Price action. Once again, price doesn't like to stay in between the lines, even if it takes it a few hours to move out. It usually does. Wick zone, in and out, back in and out, back in and out, and then back in again. Just trading off the previous day's high with the candle color. And since I've opened this trading profile, you can see it's only had about 4 or 5 ticks to, or pips to the upside. Not much movement. Actually, I guess it has had a little bit more movement. It's had about 6 pips to the upside. You can see here triggering at the Einstein lines. Price once again has to range, and that was good for a 3 or 4 pip profit, or unless you're still riding it. Something interesting today. I received something in the mail about being a stoic, stoicism. And about then I saw that there was some stoic traders out there. Kind of made me laugh because they had a bunch of squiggly lines on their charts. But the thing is, they're saying that, there's just some things about trading we can't control. And that's why we use a stop loss. So since we know anytime we put a trade on, there's a chance, there's probability, there's possibility that we lose. But we're good with that because that's just part of trading. It's kind of like going up to the plate and striking out. You got to be good with it because sooner or later you're going to strike out. I mean, you're not going to get a hit every time. It's just not the way it happens. And looking at the rat zone overlapping the wick zones here, there was something else I want to tell you about the range. Let's see, we can see here how highs and lows are taken out and what's happening with the different opens. I'm trying to find, okay, the range. In fact, one trader said, wish I would do a video on just using the range gauge. I'm not really sure what more I can explain about the range gauge, but I do know I did want to switch. That's not going to switch for everybody though. Hold on just a second. Okay, I'm back. I wanted to show something here using the euro yen. This is the weekly open, and you can see here how price during the week came up and hit the upper ATR range zone, this upper ATR zone. And you can see here today the upper daily is actually exceeds the upper weekly ATR. Now, what does that matter? Well, once again, you see here, nice places to take profit would be at the weekly open plus half of an ATR, the daily open. Oh, see, that's today's daily open, so it wouldn't have happened here. But right here, this ATR line, that would have been a nice place to start taking profit off, and you see what happened, it reversed. And in fact, it actually came back down on a weekly open, and when it crossed, that would have been a nice time to jump back in the trade, just trading that weekly open cross. But now to that trader, hopefully you're watching. If you had some question, I'm not really sure how much more I can go over, but just note here, daily range 48, average day 95, average week 163. 163 is bigger than 95. So on the first day of the week, price is going to have to range outside of that, and that's why that works. So I hope you had a great week, profitable week, fellow traders. And just remember, when you come back next week, it's not what you trade, it's how you trade it. So drain the banks. Have a safe weekend.